Can you all see my Bitcoin chart? Okay, cool. All right, so everyone knows, even if you don't trade it, you likely know that it was up way up here at whatever 66-ish, 64, whatever at the highs. And so when it pulled back and started kind of basing out, I was looking for an entry. And one of the things I was watching was this monthly flip. And I think I posted on Twitter about this, but I took a slightly earlier entry. And I want to talk to you about, strat trades, and when you're looking for entries, how you do it without getting faked out. Because that monthly break, when we got to August, you see how it whipped up and lured the longs in, then turned around and slammed them, right? All the way to this level. One of the ways to prevent yourself from getting caught up in a trade that is what I call a fake out. And really that's a liquidity grab on the part of market makers before Bitcoin makes the real move. So what I look for on something like that monthly break, okay, I go down to a 4-hour chart and I wait for it to break above that level, which it did right here. You see, we got this breakout, and then I wait for a retest. The retest on a 4-hour, a retest and hold, that's my entry long. Again, that doesn't always mean it's going to work, but I start to think the first moves are fake. Yes, in most cases they are. You got to understand the way that market makers work. They're grabbing liquidity all the time, okay? So part of studying a chart, and one of the things I'll tell you, in the stock market, we look at gaps up as being gaps that will likely get filled one way or the other. What people don't talk about, there's another kind of gap on a chart, and that is gaps like these really big engulfing candles are kind of like gaps in their own right. So when I look at a chart here of Bitcoin, and clearly if I'm looking at this candle, these aren't formed yet on the 4-hour chart, but I'm going to draw a little box here. And the reason I'm going to do that is anytime I see a really big candle, it doesn't have to be a 3 where it takes out both sides of the range. And on these charts, these blue candles are 3s. This is just an engulfing candle. It's not a 3 because it didn't take out both sides of the range, but I'll draw a box because that's really like a gap, okay? And what that means is, and this is why I am personally not a breakout trader, because 9 times out of 10, when you see these big moves, they're gonna come back and get mitigated because they're really just like gap ups or gap downs on a stock chart. And it applies to, anything. So if I'm looking at a regular stock chart and I see an engulfing candle, I'm automatically gonna draw, because I look at this like a gap and price is gonna come back. I mean, look at this. Right in here, you have this big candle. This is a gap, okay? That wick on the previous candle, I'm gonna draw that out and I'm gonna expect price to come back and mitigate that gap. And what did it do? We start seeing these top wicks, boom, comes back and mitigates before I move higher. But that's how I personally prevent being faked out. Now, does that mean you still can't get faked out? No, doesn't mean that. You could get that retest for a move higher and still get faked out, right? But I see that a lot on daily charts. They hit daily pivots and fall back inside. Yeah, absolutely. So, but you'll notice almost always on the downside, there's some kind of double bottom. On the top side, there's some kind of double top, right? If we look here, almost always. And why is that? Well, it's because market makers, they know where the buy stops and sell stops are. Yeah, TTOs. They know. So what that's telling you is that there's liquidity there. And what's a market maker's job? Well, the market maker, their job is to provide liquidity, number one, right? And let me get rid of these drawings for a minute. But to provide liquidity and also to make money. So before stocks are getting ready to make a big move up or down, market makers are gonna fake you out a couple times. And often, you know, if we draw these broadening formations, I was talking to a trader the other day, I think it was on SPY, but let's just draw it here. Let's just draw this way, okay? It could go higher, I know, but let's just do it this way for illustrative purposes. There's a wick right there. And what'll often happen on a broadening formation on the up and down side is you will get a market maker that will fake you out before price goes back your way. So I always tell people, when you're at the top of a broadening formation, be aware and put your stop, you know, like if I was going short here in Bitcoin, I'd put my stop somewhere up here, expecting a liquidity grab, because that's what this is. If this were our broadening formation, this wick is market makers knowing people have stops up here. And here's the thing you got to think about. Not only are there stops for buy orders, there's also breakout traders here, right? That are going to have some sell stops below. So there's going to be shorts that have stops, and there's going to be breakout traders that, so there's liquidity on both sides, same on the bottom. And that's why you'll see often there's a couple times that market makers will come in there and try to grab that liquidity. Have you ever traded in the direction of anticipated manipulation? Yeah, absolutely. And really, a lot of it for me is paying attention to wicks. Okay, the wicks on a chart are incredibly powerful. So for me, on this monthly chart on Bitcoin, and I expect that to happen now. This monthly break here, that was a huge liquidity grab. So they stopped out shorts and longs. We had people expecting the monthly break, and they said, yep, we're going. Nope, we're not. And then you probably likely had shorts that had stops in there too. And when Bitcoin started breaking out, they ran both sides. So absolutely. But waiting for that retest, you're not going to miss anything in terms of rate of return by waiting for that. So that's how I try to avoid it. Really does help. And then you'll see that the real breakout was the second time around. So looking back at this chart, just a couple of things I want to point out, and then we can go into some charts that you all want to look at. But when you see something like this is incredibly powerful. This is telling you a story. You almost have to look at these charts as if they are telling you a story. And I literally, when I'm looking at a chart, that's how I talk to myself about the story that the chart is telling me. And you see right here, this kind of formation is so powerful, where it's basing out like this. Nice drawing tool. You see that? Where we've got all these lower wicks, and price they kept trying to push it lower, and buyers kept picking it up, And then we've got some higher lows coming in here too. We don't see a lot of higher highs, but when you can almost draw a straight line through that guy and it's just not going anywhere, and it depends where it's at, right? This is at the bottom of a huge sell-off. You see, and we had a lower low over here. That's a fantastic sign that price is going to reverse. So I did take a small position here. I've heard it referred to as faux show, bro. Fake out, shake out, break out. Yeah, absolutely. It's very, very true. And that's why, again, there's only one circumstance that I quote unquote breakout trade. And that would be on a chart like Mara back on, or not Mara, I'm sorry, Myrna. Okay, so Myrna on, I want to say it was August 3rd. I'm more of a, my style is to be a reversal trader. I like trading extremes. So something like Bitcoin, when it got so beaten up, I mean, clearly it could have gone lower, right? So I had to wait for the signal, that base out signal, and then the monthly break that buyers were stepping in. You know, you don't want to just go, oh, well, it's gotten so beaten up, so I'll just jump in. No, you gotta wait for signs that buyers are coming in. Those huge bottom wicks on the 4-hour chart, the fake out, and then reversal back up on the monthly. You got to wait for signs that buyers are stepping in if you're going long. And then vice versa is true. If you're going short on a chart like Home Depot, I've heard people say, oh, well, Home Depot, so when it was on that massive run, it's going up forever, it's got to come down. No, it doesn't. You know what I mean? Markets can stay irrational longer than you can stay solvent. That's 100% true. So yeah, don't buy the dip, buy the reversal. So Myrna, yeah. So Myrna, and I'll tell you why I traded it, because this to me was a breakout trade, okay? And I got in on the 3rd, and really, what was it at when I got in? 350. And my thought is that week it would go to 400, and it went all the way up to 450, which is mind blowing. But my entry was right here on the 4-hour, right around 351, that 2-2 strat reversal. And I was willing to do it as a swing. Let's go back to the weekly, that week. That was right here. For a few reasons. We had just had the monthly flip, and on the month and the week, the markets weren't going anywhere. But here we have Myrna, and this entry is a little bit earlier. So what I'll do on any trade, I don't go in full position. I'll buy, I don't know, you know, I generally don't trade a ton of contracts. As a lot of you may know, I trade Amazon a lot. So Amazon, I'll trade 2 to 3. I mean, Amazon, you don't need a lot, but something like Myrna, 5 to 10. So I'll take a 2 contract position here, right? And my stop, if I go back to the 4-hour, you know, can be fairly tight right in here, because I took that entry off the 4-hour. And then on the monthly break, on the weekly break and the monthly break, then I can add in to that position, right? Now, I had a target of 400 on this right here. So I'm mostly out by then. Yeah, same week expiry, exactly. Yes. Yep. This was this was put on, I haven't quite honestly been doing a lot of swings right now. I mean, this is one of the exceptions because when you see a stock like Myrna that's showing relative strength, did I get further ones out on your head? No, this for me, so I didn't get this move into the following week all the way up to 500. I just didn't. And with this, I was majority out by here, and I think I let one run and then I was done with the trade. The monthly for me, huge shooter. Are you looking for a flip chart? Yeah, absolutely, with something like this. But again, here's one thing about that shooter that I just want you to be mindful of. Let me get rid of these drawings. So shooters can go one of two ways. Certainly a lot of us look at them and they're assigned to go short, and certainly that's valid. There's a massive top wick here. There was a decent sized one here. It definitely was a decent trade, right? If you took the Strat signal, 372 down to 348, that's a beautiful, beautiful trade. Just keep in mind and be somewhat careful, because one of the other common patterns we see with these shooters is a shooter counters hammer, where it reverses right back up to the same magnitude. So just be careful with those. And this isn't my ideal shooter. In other words, ideally it closed right at the bottom, and you'll see buyers did pick it up a little bit here. So you just got to be a little more careful with that. Meaning it comes back up through previous range. Yeah. So here's sort of, I think there was just one on Bitcoin too. This is sort of a hammer counter. Pretend that this closed here, and then you see it turns right back around and forms a hammer back up. That's a really common pattern in the course of trading. I thought I saw, let me just look on, I thought I saw one on Bitcoin earlier. And for me, you know, I'm in Bitcoin with the expectation that we're riding back up to the top. I have taken some profits and added back in along the way. Shooter than doji, yeah. Just part of the key to success in trading, was it on the 30-minute? Really, in my eyes, it is studying these charts and making your predictions about what you think price is going to do, and then seeing if it's true. And that's kind of how you build an edge over time. Okay, I'm looking at this is what I expect to happen. There's a lot of study. It's not just I wake up and I'm rich overnight. I wish it was, but it's not. You got caught in the shooter. Yeah, part of it is just knowing how charts move. So I'll look at things like, here's a shooter, right? This white candle right here. And then it did, that did work. Your magnitude effectively was here, that inside candle next to it. But if I see it start to form a certain way, like go down and then buyers pick it up, I have an expectation it could turn into a shooter counter hammer. So what charts do you all want to go over? Or what questions, you know? And I was looking at, actually, Mara, for a possible setup. Let's see here. There's a lot of things on the weekly charts that look like they could be real nice 2-2 reversals back up, Mara being one of them. I was looking at coin also on the weekly, you know, above this level. See, oh, here's a good shooter counters hammer, right? So the idea here, NVIDIA, yeah, let's look at pre-market. So yeah, pre-market can be overwhelming for people. I'm gonna put my pre-market extended hours. It's not, pre-market is actually one of the easier setups. like that trade out of the gate, if you have discipline, if you know what you're looking at, okay? So something like this, let's just pretend market open was in 5 minutes. And what I like to see with a pre-market setup is a decent amount of range. Now, coin can be really volatile. So this, you know, a point isn't a ton of range. However, what I like are extremes. So we see it start out here, it comes up here, and let me put it on like a 30 minutes so we can see the candles. Okay. So if this were pre-market and I'm seeing a shooter and I'm seeing that it went from here all the way up here, straight up, the first directional pick, if it's at the top extreme, tends to be back to the downside. And depending on the way the chart looks, my target's going to be that pre-market low right here. So I would wait and see on a, and I like a shorter time frame. So I sometimes on a pre-market will go down to a 15-second. For me, it slows everything down. For some people, it's too fast. I get that. So I'm not, you know, if that's not your gig, I'm not encouraging you to do that. Maybe you're using the 5 minute. But what I'm looking for are top wicks here that show me it's going to fail. And my target is here, okay, back at pre-market lows. So, and then the reverse is true. So if I have a stock that it has been way at the top and sells off all the way to pre-market lows and is hanging out there, and then I see a liquidity grab with a big bottom wick, I'm long with the expectation it's going back to pre-market highs. Now, if it's somewhere in the middle, I'm likely not going to use that out of the gate kind of trade. To me, I like extremes again. So yeah, HD. So HD, and I think someone had UPST. We'll look at that. NVIDIA, UPST. I'm just going to write these down so I don't lose them in the chat. NVIDIA. And that's really how I trade it. So if I'm not an extreme one way or the other, and I'm not seeing the wicks as confirmation, you know, so these lower wicks showing that market makers are grabbing liquidity here and then buyers are pushing it back up, then I'm probably not going to trade it out of the gate. Because like I said, with options at the open, you get that volatility, you're guaranteed a gamma spike. But if you get on the wrong side of it, as you all probably know, that can be an issue. So trading the extremes, either and there needs to be range. So if your pre-market looks something like this, there's not a lot of range. That's not a chart I'm going to trade out of the gate either. You know, things like Tesla tends to have, yeah, that's quite a bit of consolidation for Tesla. But let me just see if I can find a good one. Here you go. This is perfect. That's exactly what I'm talking about right here. Okay, it's this simple. Now here's my pre-market highs, right? Here's my pre-market lows all the way down here. So if I'm watching Tesla out of the gate, I'm expecting it to fail. It's right up near the top of this range. Granted, it came down a little bit. But when I see it come up here, bust through these pre-market highs, and there's massive wicks, I'm short and my target didn't quite get there. My target is generally pre-market lows. The only exception to that, which I'm seeing right here, if you have the previous day's close right here, that's going to be your first target. In other words, to me, a close would take preference over those pre-market lows. So I would be prepared for a short back to previous day's close. And then maybe I have one on that I'm planning to let ride. But the minute I start seeing these lower wicks get bought up, I'm out and I'm taking my money and I'm done for the day. You don't need that. That's what I love about pre-market. If you don't feel like watching charts, you just want to take your options trade and be done. Boom, you're out of there. That's it. Okay, NVIDIA. It's really not any more complicated than that. It's having the discipline. Trading is so much about patience and discipline and walking away from it from time to time. If you're struggling, I highly suggest walk away from trading for a little bit, work on your mindset. Don't even look at a chart for a week. And work on maybe visualizing. Even if you're struggling, there are certainly going to be good trades that you've taken. Put yourself in that mindset, visualize that trade over and over again. What did you do differently? I like to think less about what I did wrong. I mean, I'll evaluate it so I know to help me not do it again, but I don't spend a lot of time there, because if you're concentrating on what you're doing wrong, again, you're doing a lot of that negative feedback loop. And I want to stay on the side of what I want and what I'm doing right and emphasizing that. Okay. NVIDIA, so far, all-time highs, low cost, doesn't seem like much chance for it. If markets were opening up right now, I like this setup. Why? Because it's just hovering right here, right? And if I go to, let's see, a 15-minute chart, really we got the beginnings of, like, if markets were opening, of a 2-2 reversal right here. So your next candle, if it opens. Now, the only issue you potentially have is looking left, right? That's 18 cents. But if we're looking at, and this is where you go up to the higher time frames too, right? So we can see, go up a little bit higher, this is more of a breakout setup. However, let's just look at the monthly. I haven't looked at NVIDIA for a while. What I see on the monthly, because to me, the larger time frames always take precedence. You can certainly take an entry, because to me, that looks like it wants to break out and go higher. It really does, if we have some market strength. And so the question then becomes, if it's blue sky, where's my target? Well, what charts tend to do is look for the next round number. So if I were in that, I'd maybe have 210, then 215, so on and so forth. And that's kind of how I do it. Like back to the Myrna trade, when that was more of a breakout trade, and my target of 400, I think it was at 350-ish. I know how much Myrna can move with the average to ranges, and I think I just factor that out by how many days there were left in the week. And that's kind of how I came up with my target, because it was more of a blue sky. I'm seeing these gaps. Oh, UPST, let me make sure I look at that for you. Let me look at the weekly on this guy. Yeah, now on the week, were you looking at UPST, Ian, or is it Ian or John? Yeah, is, to me, that potentially looks like it's going to be a shooter back down with the top wick. But let's see what the after hours trading looked like on Friday. I'm going to see what the bigger market structure is too. Because here's the other thing, when you're planning out your trades, take a look at the bigger picture. A lot of us forget to scroll back. And part of what I see here is this looks like it's testing this level where it's kind of been consolidating for a possible move higher, right? Because look, it's tested that almost perfectly. And if I see on a 4-hour, I'm going to take the pre-market off here. If I see a 4-hour chart and it gets above this level, then I would expect it's going to take a ride back up. So whenever I see something like this, where, you know, a newer trader, you might look at it and go, oh my gosh, that's a signal to go short. I'll look at that and say, okay, the first glance makes it look that way, but let's go down to a 4-hour and see what we're looking at. And a couple things, I do see some pretty hefty wicks here, right? Indicating that it may want to go lower, but I also see this area where there's some discrepancy. Before I'd be wanting to short this, I'd like to see it break below, come back and retest. That's where I'd go short on the 4-hour chart. Because I wouldn't want a fake out situation where it's just retesting before I move higher. Yeah. And I mean, there are some compelling reasons it could want to go short here, right? Like, I mean, we got this big gap underneath eventually that needs to get mitigated at some point. Is that going to happen now? I don't know. I'd want to see what happens there. Okay, that makes sense. Good. Yeah, NVIDIA could certainly, and I love that you're looking at the 2-day, because I'll do that a lot. Like if I look at a daily chart, and I mean, this is an incredibly strong candle right here, right? So if I look at a daily chart and I'm just not 100% sure, a lot of times I will kind of fool around with 3-day, 2-day, so on and so forth. And if I were to draw the broadening formation on NVIDIA, it's not really the tool I wanted. I wanted the extended line. Like this, or what am I doing? Yeah. I mean, certainly there's some more room here, right? And it all depends how you draw it. Really, you could draw it. Dang it, that's not the one I want. A 3 is a broadening formation in itself. So exactly where that angle will go, I'll anchor it to a 3 back a ways. So it certainly looks like there could be some more room to the upside there. I mean, let's see here. Thoughts on HD? Let's see what we got. Yeah, and HD is looking strong to me right now. Let's look at the weekly. A lot of charts have this pattern right now of these hammers. So Home Depot on the weekly, a break above 335. Sometimes I do cheat. You know, Strat says you have to wait for the wick. A lot of times for me, I'll take the body, or at least a starter. And if I get stopped out, I get stopped out. I really think whichever way you do it, just stay consistent, because I've seen both work. And a lot of stratters say they only trade on the break of the wick so they don't get faked out. But I've still seen it get faked out. So I think if you choose the body or the wick, you just got to stay consistent. But to me, that looks like it could, if markets are strong, right? That could be a move back to all-time highs here, is what I'm seeing off the weekly. And the other thing I'm seeing is we had your double bottom here, and I do like that because you had this 3, and then you had price come back. It couldn't get as low as this previous low, could it? So there's a little more strength there. It's really like a double bottom on the weekly. So I don't mind that actually. Do you front run your target area slightly? Yeah, sometimes I do with a small starter. I've had it get within cents of those key areas and then reverse. Yeah, that happens a lot. I mean, you start to get a feel for when market makers are just trying to flush out the weak hands and when it's really, you know, a place where you need to stop out. Took that trade double inside bar on the 5 minute shorter. And you took which trade, Anthony? You make all time on a trade. You know what? You can use fibs. I have before, but I found fibs can be certainly useful for that. I mean, I don't see anything wrong with using a fib. I found it equally as effective using kind of like Home Depot. What did we get here? 345. Well, 345 would be, you know, the target looking left, but ultimately I'm kind of looking at 350 or yeah, 350 possibly. Just because stocks tend to like round numbers. It's uncanny when you start looking at it. Let's see here. Lows as well. I haven't looked at lows in a while, but wow, Lowe's had some serious strength there on the week, huh? So here's the only issue for me. Look at the daily. There's definitely some relative strength there. I personally, that's not to say there's anything wrong with it, tend not to trade the continuation trades, but let's look at the after hours on this guy. Get the pre-market up on there. So part of it, like as to whether I would trade lows or not, would be looking at pre-market and how that sets up. I mean, that chart looks awfully strong to me. So it certainly looks like it wants to run. My thought would be, if I were to trade, just looking at this now, saying markets were opening, you know, and these were pre-markets, how I would be likely to trade is a breakout above here and a retest. Because I've seen a lot of times where, you know, you've got a close level and you think it's going to break out and go back to all-time highs and it fakes you out. So that's how I would trade it. I'd be looking at this 208.88-ish level for a breakout above that and a retest to get long, you know, off like a 5 minute chart or so. For swings, how tight are your stops? So a lot of it depends, obviously, where you got in, right? Swings, you've got to give them more room. You just do. But that's why, what was it? Was it Tesla that we just looked at on a 4 hour, or Myrna, I think, the Myrna trade? Not Myrna, yeah, Myrna, sorry. So Myrna, that August 3rd, here's one advantage to getting in a little bit early on a trade. And this has pre-market on, so it's going to make it, is your stop can be tighter, you know. It's like on Myrna, your stop goes here, so that's 342. Your entry, if you're doing it technically correct via the Strat, is up here at 351. I mean, with options, that's still potentially a lot of room to go against you, but you've got to give it that space. You just do. And if it's the right trade, you know, most often you aren't going to get stopped out. But that's why on these kinds of things too, I tend not to put the whole nut in right away. I'm going to dip my toe first, and then I'll go down to a smaller time frame. Let's scroll back here, and I can add in areas like this. See, here's a shooter counters hammer-ish type of pattern. Here's a shooter. It's not quite shooters counters hammer, but you know, that's just almost like an inside candle is how I look at this. Price didn't go anywhere right here. So it's equilibrium forming before that move higher. So that's an area you can add. Right, and there weren't a ton of areas. I mean, Myrna was strong as all get out, but that's where the lower time frames can be helpful, because you can see, and it is, in my opinion, not everyone's like this, and I'm not here, you know, I think part of the issue with training or trading is traders love to get into this, I'm right and you're wrong, and really, as far as I'm concerned, that doesn't really exist. There's either you follow a set of rules consistently and it works, or you don't, right? And it doesn't matter what, I don't care if you use moving averages, if you use a strat, if you do it consistently over time and it works, who am I to tell you that that's a crappy way to trade? Do I set a type stop on starters? I mean, yeah, I said if it's a swing in particular, I've still got to give it some more room, like with Myrna. Really, how did I get all the way back there? You know, the chart will tell you where those stops are. So this is the only logical place for your stop to go. And really, there may even be some traders that would go below this guy. Some that might even go all the way, I mean, here. I wouldn't give it that much room, but realistically, if this is my 2-2 reversal back up, my stop's got to go below that wick. And you can say, okay, well, I don't want my stop that far away. 10 points is too much, especially with options. But the issue is then you're going to get faked out by market makers and stopped out of too many trades, because market makers know, they know when they look at this. And this is why studying these charts is so critical. Because they know where that liquidity lies. They know right in here. There's a bunch of liquidity, potentially. How do I know that? Well, there's a whole bunch of consolidation right there. There's likely to be liquidity above that as well. So areas of consolidation, they're going to be areas that market makers run stops. Look, they did it. This just a little bigger. Here, if I make this a little bigger, all these wicks, they're running stops on people here, 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 here. So if you start to look at charts and recognize, part of the key to trading, I think, is studying enough how charts work. And then in your mind, like after a while, you can start to see what you think is going to happen and kind of plan for that and trade around that. It's forming the right hand side of the chart. What kind of stops do you use on your initial entry on a weekly option? So if I'm trading strictly off the weekly chart, I mean, I love the weekly chart, by the way. I mean, weekly and monthly kind of dominate where things are. But if I'm trading off the weekly, often I'll take an entry on that 4 hour, and I'm trying, you know, really in a situation, like say this were a 2-2 reversal back up, but here's the most recent lows, your stop needs to go there. you know. So if you're trading this, let's just say we're 2-2 reversal, really, if you're trading strictly off the weekly, your stop needs to go there. If that's too much risk, because your strat signal's up there, that's an awful lot. I mean, that's a trade I wouldn't take. But if you need a tighter stop because you don't have the account size to absorb it, it just makes you too nervous, whatever your situation is, what you need to do is go down to a lower time frame, a 4 hour, an hour. I mean, you could go down to something even smaller, but just understand if the weekly is your guideline and you're using a smaller time frame with a tighter stop, your chance of that stop getting run several times is higher. And just know that if you're persistent enough to say, look, I'd rather just take 3 little losses, you can easily set up your weekly, mark up that chart, and you could go down to a 5-minute if you wanted to, or a half an hour, or whatever it is, and put your stop below that wick to keep it tighter. You certainly can do that. Just understand you may get stopped out more. I've been using the other end of the 5-minute candle enter on. The option is going to lose 80%. Yeah. No, and that's absolutely true. So there's a lot that comes to options, meaning, gosh, there's so much of a art to one degree or another of it, and being comfortable with the way things swing. And so it's hard. And I would say, you know, if you're a newer trader and you're trading with options and you're looking at the larger time frame, it's probably a better idea to go to a lower time frame, because you're going to get completely freaked out. And if I start telling you about adding at the bottom, you know, you can add to your options trades in such a way that you can get yourself back in the money pretty quick. But I really don't want to go into that, because you can also really screw yourself up if you don't know what you're doing. And so to stop that from happening, I don't think that's a bad thing at all, Chandler, you know, to use that 5-minute candle. I think that's actually, because what's your first job as a trader? Your first job is to protect your capital, right? I'm sort of talking about averaging down, but the way that I do it, like I don't start, how do I phrase this? I don't start adding into a trade. And I guess one of the ones I could talk about here would be Amazon. I posted this a long time ago, like back in May. But I'll just tell you about it because I'll just show, this is a good example, a recent one. So I was looking for Amazon to break out. My target was 3,600 in July, which it got higher than that. But I want to say my entry was, I think it was on this candle, actually. I don't recall, but let's just say it was this candle. So in terms of averaging down, I am not going to buy or add to that trade down here. Okay, I'm not, because these are not candles that are telling me buyers are stepping in. So what I'm going to do is wait for a sign that buyers are stepping in. Well, to me, the first sign that buyers were stepping in was this kind of hammer-ish kind of candle here. So my ad wouldn't be on that candle necessarily, but it'd be right here on this candle, because buyers stepped in and there was follow through. So I'm going to add when it opens on that dip and I see buyers pick it up, I'm going to add right here. And options work such that with these 3 days of theta decay, and we just had a TTO, that on this push, I'm going to be instantly back in the money. So the way I add averaging down, oh, I know, swinging that gap short, no kidding. I'm careful about the way that I average down. So unless, like when I was looking at this particular setup on Amazon, I fully expected that move back up, but Amazon can smack you around really good with options if you're not careful. So you just, I'm not wanting to just buy all the way, you know, without knowing where that bottom is. I'm going to be careful, and I'm going to add when I feel that I see buyers stepping in. Because if you add to a losing trade with options, you can get yourself in a world of hurt quick. You really can. It's not the best way. I'm looking right now because I missed the I mean, this was earnings, right? So I'm not going to be holding over earnings anyway. But I'm kind of waiting for a sign that buyers are stepping back in, and then that double bottom to go back long and fill in that gap. I'm never in a trade that goes against me long enough to average down. I'm out. Yeah. And so this particular trade on Amazon, the only reason I didn't get out, really my stop was pretty wide. I mean, it was way down here. I was willing effectively to lose. I only had one option right here, right? So I was willing to take maximum risk because the way that I viewed market structure, and I was also out, 45 days or something from where I got in. The way that I viewed market structure, and really it came off this weekly chart, was that we were going to, I was so confident in what I saw from a market structure perspective. I don't often do that myself, where I'm willing to hold on. But I had gone into it knowing you don't always get the perfect entry, right? And I was so confident it was going to do this, partly because I've traded Amazon more than probably any other stock. I wouldn't necessarily have that same level of conviction with something else, you know. But yeah, it was what was this date? June 2nd to, well, I guess it was about a month, but I was out, I think 45 days on the strike. But someone had mentioned swings. I have not been doing a lot of swings, and I'll tell you why. Let me see if I've still got the one point. Here we go. So I take my cues on swings off these monthly charts, right? And ideally, I like to see all of the indexes being strong and breaking the previous month. Now, SPY's have been very, very strong, but there's a few things here that give me a little pause, which is these lines that you see are linear regression. And really all it helps, it's almost like drawing a broadening formation without drawing it, meaning one standard deviation is this little range in the middle, 2 is this next range, and then 3 is here. And when stocks get 3 standard deviations away from the mean, and the mean would be this line right in the center. Okay, that's your mean. That's kind of like your average. Yeah, you're welcome, Jeff. When stocks get too far away, 3 standard deviations away is a lot, meaning stocks always have a proclivity to fill in gaps and revision to the mean at some point. That's just what they do. They always come back and test. And so when I see the indexes, this is now getting to be 4 standard deviations away. It doesn't mean it can't go higher, because what did I say earlier? You know, stocks can remain remain, I forget what the word is, can go farther than, and longer than you can remain solvent. But when I'm swinging, I like to see that the indexes are in alignment together. First of all, moving in the same direction. You have IWM that's divergent from SPY and Q. And then you have diamonds that aren't showing it. So there's a lot of divergence. That's not my ideal swing environment. And in addition, August is a month of low volume. You have half of Wall Street that is on vacation. So any move gets exacerbated one way or the other. And I just, the indexes, let's go to a daily for a minute. There just hasn't been a lot of movement. Price really hasn't gone much of anywhere in here, right? It's just kind of bouncing around in a range. Look at IWM. It's a range and down and a range. It's just, you want to see the indexes ideally in your side. That's the reason I took Myrna though, because everything else was just kind of sideways or nothing. And when you see Myrna right out of the gate in a new month showing strength like that, that's relative strength. That is the exception where I will take the breakout trade, because it's showing relative strength when indexes are kind of like not doing much, right? Markets can be, all of a sudden I forgot what the saying was, but it's such a good one too. Handful of majors are keeping, bloated indices going parabolic. Exactly. So for me right now, like some of the things like Mara and coin, I may be willing to take a swing on, because if I look at crypto right now, and these are crypto trades, they kind of go in alignment with that. And, when I'm looking at Qs here on the weekly chart, in all honesty, that looks like the Bitcoin setup at the bottom of that range, doesn't it? But where a pattern like that occurs is important. So the Bitcoin, on that 4 hour I showed you, where it was kind of these lower wicks and it was basing out, that can be different when it's at the top of a move. So Qs, they're showing that basing pattern, but it's at the top of a move. So sometimes that can be a fake out where market makers are trying to grab longs that think we're breaking out. Well, we'll have to see. We'll let the charts tell us, right? But this is much different pattern at the top of a Q weekly chart than it was at the bottom of a decline, right, on Bitcoin chart. So just keep those things in mind. Where something occurs in a pattern matters, right? So this could be a setup that and if I were trading this breakout on the weekly, I'd just wait for that wick right there. And then my target would be probably 380 on the week. And then increments of 10 afterwards. But that could easily be a breakout for a move higher. We'll have to see. But this, what the linear regression charts help me understand is kind of where we're at in space. And if I see that we're 3 standard deviations away on the downside or the upside, that just means we're so far away from the mean that there's going to be a revision to the mean trade, potentially, which is a whole nother, the Fed will have to see, Yeah, exactly. Price action 3 standard deviations away happens so infrequently that, my style of trading, I guess my edge, if you will, is I like to trade extremes. So when I see something that looks extreme, it's 3 standard deviations away, one way or the other, topward, and it's given, so if I'm 3 standard deviations away on the downside, I'm getting bottom wicks, like signs buyers are stepping in, that's a great long to me. 3 standard deviations, 3, 4 on the top side, and I'm getting top wicks and starting to see lower. That's a great, you know, trade back. So pre-market, if I've got real nice range pre-market and it's at way at the top of the range and way at the bottom of the range, if it's at the top, I'm taking a short back down. You know, if it's way at the bottom, I'm taking a long back up. If it's mid-range, I'm probably not going to take that because it could go either way, right? So I'm a reversal and kind of extreme trader because you want the easy pickings. Why take something that's mid-range and has less likelihood of going where it's going to go? That's just how I see it personally. But it's almost 6, guys, almost 7 Eastern. Was this helpful? If so, you know, maybe we'll try to do these. I know it's been a long time since I've been able to, but maybe we'll try to do these more often on Sundays. What do you guys think? And what would you like to talk about next time? Feel free to type in chat. I'll appreciate you guys too. Thanks for showing up. I'd be very lonely if I was market profile. Yeah, absolutely. We can definitely talk about that. But cool. Thanks for showing up. What platform do you use? So I actually use 2. I've got TC2000 charts and I have TradingView. And then as far as platforms, TradeStation, and yeah, it is recording. TradeStation, and I have a TC2000 brokerage, but they kind of stink. Yeah, profile stuff, hit up Jen. Yeah, you guys, do you have my Discord? Yeah, I've actually got a scanner, Roy, that scans automatically throughout the day for following each week in a breakdown. Yeah, I hope to post some of those. Yeah, and I can't be as active right now in Discord as I used to be. However, if you go into Discord or you message me, I do really try to respond. So let me post my Discord here. Hold on a second. So there's my Discord. Whoops. What did I do here? Somehow my thing's on. Hold on, let me get my chat's all weird. Hold on a second. Okay, here we go. Okay, so that's my Discord, and I'll just give you my because you'd be surprised. I mean, very few people actually hit me up for like less than you would think, because I don't know why. I don't know if people just, you know, are afraid to bug you, or this is my direct Discord. I forget exactly how you message people, but oh, pre-market routine. Well, really, it's no more complicated than marking up. I'll tell you real quick. Like I'm weird because I like to be up early, you know, and watch, kind of narrow down to what stocks I'm going to trade. I tend to do a lot of trading of the same stocks over and over. I just honestly do. I trade Tesla, Amazon, SPY very frequently. And so my pre-market routine is really to get up, look at what market's doing, where the VIX is at, those kinds of things. There's some specialized indicators I won't get into because they're only on TC2000, so I don't know that they'd be helpful to discuss. I look at the VIX, look at FinViz, you know, watch the futures, and then I'll go and mark up on a daily chart. I often will mark up the highs, the close, the open. highs, lows, close, open from the previous day's candle. And then the most important thing to me is looking at what those pre-market and after hours levels look like. So there's actually this, you see these kind of poop green color. I put something on my chart. Which one is it that marks that up automatically? I can post that in the room. So see how that marks my pre-market levels automatically. And I'm looking for a chart pre-market if I'm trading at the open that's got a lot of range and it's at an extreme. So Tesla would qualify. And I would be looking for a short here, despite the fact that it broke out above pre-market, because I'm going to look at that and go, you know what, that's likely to be market makers grabbing liquidity, stopping out shorts and longs before they take it back down. So, you know, but the key thing I think pre-market is I like to get up early, have a workout, eat some breakfast. I like to be relaxed in the way I go about approaching it. I'm not a person that jumps up 20 minutes before market open and is ready to trade. I need to get in the right mindset. I've got my trading music, which is kind of like house music, and I just get in that zone, right? That's how I need to do it. So hopefully that helps. But in chat, feel free to type in things that you want to see videos about, that you want to talk about in these sessions, and I'd be more than happy to do it. All right, guys. Have an awesome night. Okay, thanks for coming. I appreciate it. Just you're so welcome.